Hello, welcome to this Crypto Professor introduction to dollar cost averaging. Dollar cost averaging is a simple technique for allowing you to buy a larger position in cryptocurrencies or anything you're particularly trading without having to worry too much about the live price. And it also allows you to build up a position size for a good price overall. I'm going to use two examples, one of which I am currently looking at for Ethereum, and it was actually prompted by a Facebook request from Robin. So shout out to Robin if you're listening to this. You asked the question, should I buy more Ethereum at $1,700 and what price target should I look for? I'm going to answer that in this video, and I'm also going to use another cryptocurrency called DragonChain, which is a very, very small token that's currently been quite impressive, one of the most impressive coins actually that I have been trading recently. I know that there are a lot to choose from at the moment as the market is going very hyperbolic at the moment. Okay, so I'm going to use those two examples, one from Ethereum and one from DragonChain. The DragonChain one is a real example of where I'm still holding a position that I bought some time ago. So what is dollar cost averaging to start with? Well, effectively, it's using your dollars or pounds or euros or whatever you're trading to average out the price. Okay, so I'm going to give you an example. There are two effective types of dollar cost averaging. One is just weekly buying or monthly buying and not really caring about the price. Okay, if you've done that with Amazon stock, for example, over the last 10 years, you'd be sitting very, very comfortably now on a large profit because you're just adding to the market. Okay, there is a certain argument at the moment for doing that. In terms of the altcoins and Bitcoin in particular taking off. If you happen to be putting money in the market at the moment, chances are you are likely to be profitable with most of the cryptocurrencies you actually pick. And if you're dollar cost averaging, that's another technique that's going to allow you to buy a better position size, or a cheaper position size I should say, than just going in 100 grand at a time and hoping for the best. For example, you could buy at the top. In actual fact, Ethereum is currently at a top. In terms of its use, it is a good investment style if you're particularly concerned about buying at the top or not getting the best price. But there are several bits of empirical research that say it's not the most effective trading system, and that's just because people who use dollar cost averaging tend to buy blind. They tend to just put their money in the market and hope for the best, basically. We're talking mutual funds here in particular. So what I'm going to try and do is show you a little bit more sophisticated way of doing dollar cost averaging, which relies on the price structure and enables you to kind of set limits in advance of where you want the price to go so you get the best position size you possibly can. Let me show you an example. So this is Ethereum. So this is the entire history of Ethereum, and as you can see, we're currently very, very high. Therefore, you could say that the risk of a sell-off is actually relatively high as well. Okay, now ultimately I think that this has got enough momentum to continue on through to the 0.618, which is $2,244, and probably a little bit of an overextension from that. Okay, we've obviously seen some very bullish momentum, and if I looked at the ADX at the moment, or the trend strength analysis, I'd probably say this is actually going to be extremely strong. In actual fact, let's actually do that. Yeah, exactly. So it's 82. That is a very, very strong trend. Okay, so what I'm effectively looking at is, when I zoom in a second on this, we're going to break this resistance and continue on higher. Okay, now obviously anyone who's buying a position here, would have ideally wanted to buy it down here or here, but they haven't. Okay, so it's kind of a situation where should I or shouldn't I? Okay, and there is a way to help you determine whether or not it's a good idea to buy here, because chances are if we break here, if the bull run effectively continues, we're going to see this realized, and you'll be looking back and thinking, I wish I'd bought at $1,800 or so. Okay, so first and foremost, I am bullish on Ethereum. I think the price is going to ascend to a minimum of 2,200 over the short term. Okay, if you look at Bitcoin, where Bitcoin is right now, the discrepancy between the two should have Ethereum comfortably close that gap a little bit and appreciate in price. Okay, let's look a little bit more in depth. Okay, so first and foremost, let me explain what's going on here. So I've got a trend line here, okay, which we're respecting really nicely. We had a triangle pattern formation here where we saw some resistance. Okay, started to see it around here because this is a zone, it's not just a line. Okay, and we broke through it a little bit, but around this area. Okay, so around the $1,500 mark, which is a psychological dollar mark for the price action, actually the previous all-time high. So that's why that price stopped there effectively. We then broke through it and we ascended very rapidly up to this new resistance line here, which we're currently respecting, which is the $1,800 region. Now, there's no previous price action for this area, so we can't go back and look at previous liquidity zones and previous price action to determine whether or not this is likely to break. I think it will. We've got a very, very good, strong trend line here. We've got all these averages fanning out in a nice bullish trend. And look at the way the 200 4-hour EMA is actually respecting that trend line. Okay, so if I was trading this and I already was in the market with Ethereum, I'd be setting my stop loss underneath this green line. Okay, so underneath this 200 4-hour EMA. In actual fact, you could even look at the day, but the 4 hour is probably more accurate. So currently this red line is where I'd set my stop loss, around about the $1,350 region. Okay, because if we break this trend line here, chances are we're going to come back and retest this low one here, which at the moment seems very far away at around $800. But when crypto decides to sell, it can drop very rapidly, as even more rapidly than when it ascends. And we have seen some incredible ascents recently with various cryptocurrencies. So if you wanted to get in the market now, you could just buy here and hope for the best and hope that the market breaks this resistance level. Okay. However, having said that, what I would do is I would dollar cost average into these movements here. So these prices here. Okay. So we've got 1770, 1740, 1720, 1660, and roughly 1620. Okay, and then obviously anything down here theoretically is good to go, provided you've got that stop loss here. Now, this isn't an ideal trade because if this stop loss is triggered and this is the peak, then you're going to lose quite a lot of your position sizing. Okay, on this movement, and you're going to lose quite a lot of money if this stop loss does get triggered, particularly with the volatility where it is at the moment. So it's not ideal, but with the follow through and with the ADX as high as it is, we theoretically should see this follow through and break this resistance level in due course. Okay, so it's kind of a little bit of a last ditch attempt, I suppose, to buy into some Ethereum before it does a next big move effectively. And what you don't want to do is be buying here and it then not go through and still get stopped out. Okay, so it's a damage limitation, but also a best case preparation for the next move higher. Okay, so I've done some back of the envelope calculations. As I say, 1770, 1750, 1720, 1670, 1610 and 1500 were the entry levels, and I've also weighted it so that the best positions are the most frequent. Okay, so you're buying your most Ethereum. If you wanted to buy 10 Ethereum, you'd buy the majority at the best possible price. Okay, maybe you get 4 or 5 of them filled. Okay, and that's still better than having them all filled at 1770. Okay, notice the current price is 1786 or so, so we're just about to theoretically get that one filled. The average price across all of them, if you get them all filled, is 1630. Okay, so very nice and comfortably around this region. Okay, and a good $150 lower than where we are presently. Okay, the profit with the dollar cost averaging approach is $6,100. Without it, if you just bought it, if you live bought now, you probably get a price around $1,800 with slippage and people wanting to obviously match that order. You'd get a profit of $4,400 if you took profits at the aforementioned zone $2,240. So you're effectively getting an extra $1,700 purely from doing dollar cost averaging. So you're not only reducing your risk, you're also making it more likely that you'll make more profit if we do break that resistance level. Okay, so it's a good all-round technique. Okay, I haven't calculated the loss just because I think anyone who's buying Ethereum theoretically here, there is talk of it going to potentially as high as $9,000, for example. That's what some people are saying. They're really bullish on it. So setting a stop loss here is a last ditch resort basically, and ideally you'd buy something a little bit lower than here, but this is optional. Okay, there are a lot of people who are very happy to hodl long term with their crypto, and if this is a portfolio movement as opposed to a trading movement, then I would say that holding on to your Ethereum, even if we do see a return to these levels, would be a good idea, because we could have a correction and then a subsequent rally. Okay, so this is entirely optional depending on your risk appetite. If you're happy to take a $5,000 loss in exchange for buying the same amount of Ethereum for the same price down here, then you can put the stop loss in. Otherwise, I would probably hodl and maybe even earn some interest on it, basically, if we do see that drop. But the important thing is you're not buying it all the way up here, only to have it stopped out, or even worse, down here. You're buying into the movement and getting the volatility to the downside. Now, you could argue, what happens if that doesn't happen? Well, you could then look to buy on the breakout if you really wanted to. So if we have a break here and a close above this line, so we have a new candle formation above this line, ideally on a day chart, although with crypto it can be very, very volatile, so I tend to use the 4 hour. You could then just buy your 10 Ethereum and not really worry about the dollar cost averaging. But whilst we remain comfortably under this and are showing strong resistance to go any higher, the hypothesis is that we will correct to at least the middle of this triangle, just like we did here. In actual fact, you can see it right here. Okay, so we kind of approached this resistance level, scaled off, came all the way back and touched the trend line, and then did the same thing again, sail off, touch the trend line, same thing again, almost touch the trend line, etc. And we just did that over and over again. So effectively what I'm planning is this happening between now, February 12th, all the way through to theoretically kind of the end of February, before we get a breakout to the upside, depending on how strong this trend line is. And I'm guessing that this trend line, this ascending trend line, is stronger than the resistance trend line, as more people are willing to stake their Ethereum for the long term and therefore unable to sell it. Okay, so yeah, you can also see, as I've got the MACD up, that this movement here, this sell-off here, okay, where we had a peak, actually had a descending pattern in the MACD. This is called divergence, or negative divergence, effectively. Okay, so even though the price went higher, the actual technical analysis indicated that this was overbearing, basically, and was due a decline. Interestingly, if you look what happens right here, we had a matching pattern and then a previous return to a high, but on a 4 hour chart we're actually lower and we're actually crossing over. Okay, so it's a bit uncertain because we're using not very much data and also using a 4 hour time frame. If we're looking at 1 hour, perhaps we can see a little bit clearer. Yeah, okay, so we are crossing over. Theoretically we could move down, but on a 4 hour, the hypothesis is that we are going to see some sort of lowering of the price before we see higher prices. Okay, now obviously everything with trading is a hypothesis and is looking for proof. Okay, at the moment I would on the side of caution with this and say, if you own Ethereum, fantastic, keep it. Okay, there's not much point in selling out here to buy lower, but if you're looking to build a position, okay, then these dollar cost average prices are probably the best bet at the moment with what I can currently see from the charts. So let's turn to a success story. Okay, this is a cryptocurrency called DragonChain, which I've been following for a number of years. Originally it was created by the Walt Disney Company and then outsourced or open sourced in 2016. I've been accruing a large position in this because I firmly believe that it's going to see, $4 or $5 in the case of the next few years, and I want to. It's a long-term hodl for me, basically. Okay, I've owned a number of DragonChain for a number of years, and I still do. But I shortly before Christmas, with Bitcoin going up, etc., I wanted to increase my trade size significantly, but I wanted to do it at a good price. Okay, so these are the actual positions that I bought through KuCoin. I bought 4,300 on the 23rd of November for 0.024. Okay, that's dollars. I bought 8,400 on 12th of December, 0.026. Again, 6,600 for a total of 15,000, 0.0266. Again on the 19th, 5,000, 315, and then 3,700 for a total of 28,000 by the 5th of the 1st. Okay, so you'll notice the actual price was much, much higher than this throughout the whole thing. In actual fact, if I'd wanted to, I could have bought around the 8 cent region, okay, which would have very much limited the amount of Dragon that I could actually purchase with my allotted funds. Okay, so effectively I bought 28,000 DragonChain for an average price of 0.272, when the average, and if I actually look, if I don't think I'm able to get an indicator up on this, bear with me a second. Well, the average price roughly, if I'm looking at, is around 5 cents or so. Okay, so I was actually able to buy 2.5 cents lower than the average price over this period, purely through dollar cost averaging. Okay, so that's just kind of setting a limit at the extremities of what I think the price is going to move to, and then getting it filled on the sell-offs. And obviously there were some nice sell-offs here. I should note that this is the US dollar as calculated by TradingView, so these prices don't necessarily match what I was trading in. I was also trading it against NEO, not necessarily the US dollar, so that's why some of the prices look a little bit strange, is because this dollar rate was obviously different to the NEO rate, etc. But these are actually the real, in real terms, what I paid for each of the dragons on this movement. Okay, so I bought an average, my total trade size was $761 by the time that I had fulfilled all of those 28,000 DragonChain. Okay, and if we actually look what happened over the course of the next few days, we then started a huge, just like most other cryptos, a huge movement up to where we are today, which is around about the 16 cent region. Now, as I say, I'm not particularly interested in taking some profit here. I could, but I'm actually staking the Dragon for time, okay, which is part of their metric system of how they actually allocate rewards. And I'm actually staking the DragonChain, which I'll talk about in another video at another time. So I'm just kind of hodling at the moment and just awaiting further extensions on this movement, okay. But if we actually look at what I've made so far, my position size is effectively now $4,480, and I've made $3,719, or just under 400% so far. Okay, so dollar cost averaging really helped me there. I could have bought, you know, almost at 8 cents, okay, which would have only been 100% movement from here to here, which is still, you know, excellent. Okay, nothing to sniff at, of course, but by using dollar cost averaging, I was actually able to lower the average price I paid for my DragonChain and get a superior result. Now, you can theoretically do this with any cryptocurrency, okay. All you need to do is look at the lows of the day, okay, and obviously any volatility to the upside can theoretically be matched by volatility to the downside, okay. So just look at the price of your assets, okay. At the moment, it's a little bit more complicated just because we are in a bull market for most cryptocurrencies, but you can do things like this using the EMAs, or moving averages, basically, to plot out where you think the price is going to retrace to after its impulse. Okay, we've had a lot of cryptocurrencies impulsing recently. Binance, Coin, IOTA, for example, have also massively climbed, and obviously Ethereum and Bitcoin as well. So using those EMAs, those exponential moving averages, you can actually plot out where best to set those limits. Okay, you can also look at when a coin is range trading. Okay, so this is range trading, obviously. Peak here, trough here. You're kind of setting your limits. I'd say probably a third of the bottom of the ultimate low. Okay, so the average you actually get, and there's obviously also down here, that's the extreme low there. Okay, so less than 1 cent effectively. So you'll notice that I'm roughly around about 1.5 times the maximum low point here, okay, in order to get my positions filled. Obviously, as time went on, I became a little less concerned. The bigger positions were already in. I became a little less concerned with the price. That's the same as happened here. Okay, so if we did see a sell-off here down to these aforementioned levels, say we hit the 81 moving average, 81 4-hour moving average, and then bounced, I could say, okay, well, I'm happy to buy in here with all my Ethereum, because I don't think we're actually going to get a tap of that trend line. So say, for example, we were here, okay, I would say, no, there's not much of a chance of us breaking that. And if we do break that, then my trade hypothesis changes, and I need to be out of the market rather than in it. So if we have a bounce from here and maybe up here, I could buy the rest of my Ethereum, okay. And if you want to see, I've actually got 50,000 DragonChain now that's been staked for 50 days, and I've earned 2.5 million time effectively and that's been now 50 days staked. So I'm not planning to sell it anytime soon. As I say, I'm staking it, but that is the current position that I am managing, and I was able to buy at least half of that position at a very, very good rate using dollar cost averaging. Okay. Have a read of the Wikipedia article. Okay, dollar cost averaging for cryptocurrency is slightly different to for equities, okay, or for mutual funds. Okay, with mutual funds, it's just throw your money in effectively and watch the price rise over time on average, and that's what tends to happen. But with crypto, you can actually pick the prices that you want and select them and be a little bit more intelligent about it. There are certain services where you can, buy on a weekly time frame, okay, and they are not price specific. They just have a time and they buy. You can use apps like crypto.com to do that. Okay, that is a better strategy, I suppose, than putting a lot of capital in it at a random price, but it's not ideal. Okay, in order to be as ideal as possible, you would look at the actual price action and look at the averages and see what's going on. For example, right now, as we can see, if I zoom in on a 15-minute chart, which is very, very short term, we're actually nicely correcting now. We're actually having a nice drop. I would say that is actually going to be broken, okay, within the next day or two, and we should actually see a nice correction down to previous lows, and all our limits theoretically should get filled if you're planning on buying them. Naturally, if by the time this video comes out we are at the low end of this, then you can just ignore the dollar cost averaging advice and buy live if you want to lower than probably say 1650. Okay, so obviously our average price was 1630. If we're lower than that by the time this video goes out, you can afford to buy live. You don't need to worry about setting these limits up, but this is what I would do if I was actively trading Ethereum right now. Thank you very much. I hope you've enjoyed this dollar cost averaging video. There will be more videos on simple trading techniques coming in the future. If you have a particular technique that you'd like me to discuss, or you'd like anything in particular, maybe a project or cryptocurrency project that you are excited about, please leave a comment and a suggestion. But otherwise, I hope you've enjoyed this video, and I look forward to speaking to you on my next one. And as always, happy trading. If you've enjoyed this video and would like to get $25 of CRO completely for free, please sign up to crypto.com using our referral link in the description on this video. We also get $25 of CRO to keep this channel operating. The Crypto Professor likes feedback. If you've enjoyed this video, please don't forget to like it. If you'd like more of the same, please don't forget to subscribe. Or if you have questions, please post them in the comments and I'll endeavour to answer them for you. Thanks for watching.